Good afternoon, all. CamelbackTrading.org coming to you this Friday afternoon, December 16th, and we are looking at Window Traders Market Profile of the ES and SPY. We have a lot to talk about. We will be recapping all three of these charts for the three indices we follow. Very interesting day again. A lot of different things took place because of dividend, because of rollover, things of that nature. So let's go to the other two first. And before I go on, because I forgot to tell a lot of people in my room towards the end of the day, I'll have a video Monday morning, but I'm going to miss the opening Monday morning. I have a doctor's appointment early. Should be back hopefully by 10:30, the latest I would hope. So I will miss the opening on Monday, but I'll be here the rest of the day and the rest of the week. Triple Qs go out with a trend day. They did not fill their single prints. They're the only ones that held them. They really tried to fill them, but they didn't. So they go out with a double distribution day and 9 wide. And they're the most resembling a B shape. We lost our B shape, as you'll see in a minute. IWM, they go out 9 wide, and that's it. Now, Russell, Qs, ES all fill their gap. SPY did not fill their gap because of the dividend. It's still a gap. You can call it a dividend gap, you can call it whatever you want, but we still end up with a gap on the day that has to be dealt with. Number two, SPY filled that huge gap from back in November 10th, I believe. Okay? Because of the dividend, we had a bigger head start. Number three, ES did not fill it. They got into it, but they didn't fill it. So, and again, based on the December contract reference points. So SPY has a gap above today. ES it still has the gap below. The bigger picture is monthly had an outside week down. It's down. The daily's down. So we'll go over all that in a moment. Had another good day today. Again, strictly from the short side. Did not take a long today. I could have taken a long today. In fact, a couple of people in my room did very well on longs, especially in K period, I believe it was. So, or J or K period. But I decided to stick with the short side where it was most comfortable, where the sellers were in control most of the day. A, B, and C was, again, a field day. That's my type of action. Gap, push down, good tempo, good volume. I think I took 8 shorts in A, B, and C. D period, I should have had a very good period. I ended up breaking even. I took 1 short against C's high initially. Then I took off a very small and it came all the way in. Then I took another short when it went up, took it off for a small loss when it went up instead of adding because it came right back in again. So I had to break it even in D period, but that was nobody's fault but my own. J period, took a short against G's high that worked out because at the time that was the afternoon rally high. And I actually took 2 shorts. Well, I took a small short in KLNM, believe it or not, made money on all of them, even though we were one time framing up. They pushed up to a visual area each time where it pulled back. I was tempted to take a long both to pop some shorts. I think in J, I decided not to, and I almost got long to just go fill the single prints. I'm like, I've had a good day from the short side. I'm just going to leave it. My M short was a good one. It was up around 94. I only made like 2 points on it, but it came in like 6. I should have held on to it a little longer. So a good day, a good week. The only mess up I had with this week was that other day when I had that trade in that I got screwed up on, but that was nobody's fault but my own. So, and another day over 100 million. We're at about 105 million already. So 4 out of 5 days this week over average volume. And again, our ranges have been good all year. As far as our destinations, now B period, you hear me call that highest accepted price. I wasn't thrilled about it for 2 reasons. One, I like B's high closer to the day's low and generally not above the opening. And second, you really want to hold a trend day, which it usually does. However, we never got back above it. If I was in ones, you would see where A closed and B opened and drove straight down. So I'm going to use B's high still as a visual point. However, it's right around the 50-day moving average, which is probably going to be more important on Monday. So 385.88 is that highest accepted price. Then we have today's high of 386.58, which is a daily high, and then filling the gap at 387.89, 131-point dividend gap. And then don't forget, we have Nothing until the next day's high of 395.25 and then that gap of 396.31 from the 15th. For the downside, now this is pretty interesting. We have nothing until today's low. We were only 8 wide. So our first downside destination is 381.04 in SPY. And then below that, there's a price vacuum. 373.61 weekly low, 370 daily low, and 368.79 monthly low. ES, for the downside, today's low is 55.25, which is a weekly low, and then fill in the gap at 25.75 from November 10th. Then they don't have anything to 63.75, which was a 24 wide overnight low from the 9th of November. 32.25, which was 18 wide from November 8th, and then 37.50, which is a weekly low. Again, I really hope you write these down. They will not be given out again. And then on the upside, we'll use B's high of 05.50 as the highest accepted price, 12.50 daily high, which is today's high, and an 85.25 daily high, and fill in the gap at 97. Now let's have some fun with these charts. We're going to start with Russell first, like we always do. So look at the monthly. They almost took out these two monthly highs. Right? The monthly high is 189.24. So we missed that monthly high and that one by like 30 to 50 cents and rolled over and took out wow, did we take out last month's low already? We did. We took out last month's low already. So Russell is firmly in balance. 4-month balance, 9-month, 8-month balance, whatever you want to call it. The monthly's in balance, but so far, a tremendous rejection at these 2 months. We have a triple top here. We have a triple top here in Russell on the monthly right now. Very interesting. Balance. Weekly. Down. Came out of balance to the downside. And don't forget, remember I always talk about that 173.39 level right here. Okay? We're not that far from it. In fact, today's low, wow, I didn't realize we got below it today. Today's low is 172.67. So we actually dipped below this level. Why is that so important? It's from 4 years ago, 4.5 years ago, August of 18's high. It took 2 years to get back over it. Look at that. We enjoyed about what? From November of 20 until May of 22, above it, and then we've been going back and forth through it for the last 8 months. So that's a pretty important level. So monthly balance, weekly down, daily down. Let's go to triple Qs. Monthly is balance. 4-month balance. Okay, they did take out last month's high a little bit. Now, they're nowhere near last month's low yet. So it's just clearly balanced on the monthly. Weekly. Outside week down. They tried to come out of balance to the upside, stretched it, and then came down. So the weekly is down. It's an outside week down where we took out both last week's high, last week's low, and closed below it. And then on the daily, down. And we're below all these averages. I want to see one thing real quick. And I'm going to go over Tesla and Apple because those are two very important ones for the Qs. Did IWM have an outside week down? They did not. They never took out the previous week's high. Okay. Let's go to SPY and ES. SPY is in balance on the monthly. Okay? And technically, 411, I wouldn't call this a triple. This might be a double top with these two monthly highs. But right now, the monthly is firmly in balance still and below the trend line from COVID lows. Weekly, down. Outside week down. Took out last week's high. Took out last week's low. Closed below it. These succession of lower highs stay intact. Barely got above it here. Look at that rejection from that. Even though we got above the trend line, We never took out, I mean, we did take out this high by 49 cents, which was technically your latest lower high. Here, 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 and here. So did we take it out? Yes. But what do we talk about? Talk about acceptance. We spent, I think, 3 seconds up there. We opened up, went Tuesday morning, and drove straight down. So outside week down, down. Daily, down. Now SPY has two gaps, dividend gap and the other gap. One time framing down for 3 days, way below all our averages right now. Well, they're not that far below the 50, but we're below all three of our averages. Now I want to show you something because I think it's interesting for a lot of you that trade these other stocks. And again, I don't say this after it happened. I say it because a lot of people ask me in the room, what do I think of certain stocks? And I break them down. It's another advantage of being in the room. Somebody asked me about Tesla when Tesla was trading at about 170. I said Tesla at the time had an inside month, but the monthly was down. I said if we take out 166 in Tesla, the next destination in the bigger picture is around the 131 level on the monthly. I said on the weekly, the next destination is around the 135 level. Now, we've only gotten to 150 so far. But from 170, you already got 20 points to the downside. Well, forget 170. If you took a short once we broke last month's low of 166, you're $16 in the money already. Okay? That's also going to put tremendous pressure on the NASDAQ. Then somebody asked me about Apple. So I told them Apple is in a big monthly balance. I said 134 is a very big level for it. Okay? On the monthly. If you get acceptance below 134, you should go see the 129 level. Now, we traded below 134 today. We had a triple bottom here. Look at that. You could call it a quadruple bottom for now. So, again, acceptance is the word to look for. Are we accepted below this triple bottom? No, not yet. We traded below it, but we closed above it. So this is a very important level for Apple, 134 level. If you can't hold 134, you're going to go to 129. Now, that's not a big deal. It's only $5, but it's another leg down. And the daily, obviously, was firmly down. So, again, these are things we talk about in the trading room all the time when we're slow or what we think is going to affect the NASDAQ or anything, other indices, to break down those stocks. $30 a month. I was going to raise it to $40, but since I had these health issues and I'm going to be in and out, I'm here full time, but there'll be some times I'm going to the doctor and stuff. I'm going to keep it for $30 right now for the foreseeable future. Come check us out at camelbacktrading.org. I appreciate the likes and subscribing to this video channel. Enjoy your weekend, rest up, and we'll speak prior to the opening on Monday.